Stone's stock tanked on the news of significant loss reported because of a write-down on their investment in Interco Banc and their issues with collecting collateral in their Q3 earnings report. However, if you look at how the company's core business has performed, the company had so much growth and had amazing Q3 results. In today's video, we wanted to take a deeper dive into the company's core business Q3 earnings results and share what YouTuber ticker symbol U had to say about Stone. His videos are based on investing on a long-term horizon like ours, and we really like the way his fundamental analysis is logical. First, note that Warren Buffett's Berkshire Hathaway bought 11% stake of the company at around $24 a share for approximately $340 million to buy about 14 million shares within days of Stone's IPO in October 2018. Buffett sold about 3 million of the shares in Q1 of this year at about $70 a share, which is 3 times what he bought it for. But other than that, Berkshire Hathaway still had about 10.7 million of those shares at the start of this quarter. Berkshire Hathaway posts their trades quarterly, so we don't know if they sold Stone during this quarter yet. Cathie Wood of ARK Invest first bought Stone stock in May 2021 at $64 a share. Then she continued to buy the dip, including during the huge dip this past week. As far as we know, Warren Buffett still holds 7% of Stone, and Cathie Wood has continued to take advantage of the dip and buy Stone at prices much higher than it is today. When you look at Stone's Q3 earnings results, Stone's core business showed great performance in the recent quarter. Their total payment volume is up 81% year over year. Their total number of accounts are more than double this quarter compared to the same period last year, and their banking clients are 4 times more since last year. Stone is also investing in a credit platform for small and medium-sized businesses, and they're currently developing an insurance product with no underwriting risk. One metric that we really care about for fintech companies is bringing down customer acquisition cost. For their small and medium-sized businesses, their customer acquisition cost is up about 1%, and for micro merchants, the cost is down by 17%. As we explained in our FinTech episode 39, cross-selling and upselling is a big deal for fintech because they want to sell as many products and services to the same customer as possible in order to increase revenue. And for Stoneco, they seem to be showing more cross-selling and upselling because for their small and medium-sized businesses, their revenue per client went up by 3%, and for micro merchants, it is up by 247%. Since acquiring Lynx, which is a financial software company, their consolidated software revenue grew by 27%. Their total revenue is up 57% year over year. During the height of the pandemic, when more people went cashless, 51% of Brazil's e-commerce volume went through Stone's platform. But Stone has shown that even after the pandemic, they are gaining more market share organically. The biggest reason for Stone's price drop was due to their investment in Interco Banc. They had to write down the value of Interco Banc shares, and it shows up as loss on their P&L. We also explained that Stone's credit collateral collection is still an issue. As a reminder, this is because Stone's credit and loan solutions over-relied on Brazil's new collateral registry system. But the problem is that Brazil's collateral registry systems don't talk to each other, and the registry system was not robust, so merchants were able to put up the collateral and get loans from different places. And now Stone is dealing with non-performing loans as a result. So Stone is trying to protect themselves by putting more cash on the side for the non-performing loans. Stone needs to figure out a way to depend less on Brazil's collateral registry system or discontinue their credit and loan products altogether. Stone is also aggressively spending their cash on investing in companies or other investing and development activities, which worries some investors. But this is typical of high-growth companies, but since they did have a bad investment in Interco Banc, we will have to keep an eye out to see if they're investing in the right places. Another impact on the stock price was that on October 26th, FBI raided Pax Technology, which is a Chinese point-of-sale device company that is used by millions of businesses. Stone uses PAX devices as well, and after this FBI raid, Viceroy Research released a one-page short report on Stone, and this caused investors to sell the stock. To summarize, Stone's core business is growing really well. They did make a bad investment in Interco Banc, but they had no control over it since it was due to the slowdown in Brazil's economy. And Brazil's collateral registry system is faulty, which impacted Stone's credit and loan performance, but again, this wasn't Stone's fault. As a high-growth company in the emerging markets, these issues are somewhat expected since the emerging country is not stable yet and they're trying to figure it out as they go. But these are issues that Stone couldn't control. Looking at Stone's core business, though, they are continuing to expand and grow. This is a high-risk, high-reward type of long-term investment, as with any high-growth investments in emerging markets. And one thing to reiterate is that in these types of high-growth investments, you need to invest for the long term of years and not just a matter of days or months.